As a result, food, energy, and commodity prices remain elevated. Countries across the world are facing inflation at decadal highs and persistent demand-supply imbalances. The war has led to globalization of inflation. Not surprisingly, central banks are reorienting and recalibrating their monetary policies. Emerging market economies are facing bigger challenges from the increased market turbulence, monetary policy shifts in advanced economies, and their spillovers. The process of economic recovery in the EMEs is also getting affected. During these difficult and challenging times, the Indian economy has remained resilient, supported by strong macroeconomic fundamentals and buffers. The recovery has gained momentum despite the pandemic and the war. On the other hand, inflation has steeply increased much beyond the upper tolerance level. A large part of the rise in inflation is primarily attributed to a series of supply shocks which can be linked to the war. In these circumstances, we have started a gradual and orderly withdrawal of extraordinary accommodation instituted during the pandemic, that is the COVID-19 pandemic. Similar to our resolute and timely actions to limit the economic damage emanating from the COVID-19 pandemic, the Reserve Bank will continue to be proactive and decisive in mitigating the fallout of the ongoing geopolitical crisis on our economy. We have already reprioritized our policies to control inflation without losing sight of the growth requirements. Our approach underscores a commitment to move towards normal monetary conditions in a calibrated manner, and our steps will be measured. We will remain focused on bringing down inflation closer to the target and fostering macroeconomic stability. Let me now focus on the decisions and deliberations of the Monetary Policy Committee meetings, the meeting which we had recently. Against this background, the Monetary Policy Committee, that is MPC, met on 6th, 7th and 8th of June, and based on an assessment of the macroeconomic situation and the outlook, the MPC voted unanimously to increase the policy repo rate by 50 basis points to 4.90% with immediate effect. Consequently, the standing deposit facility, that is the SDF rate, stands adjusted to 4.65%,